Welcome to Biztech's Investor Conversation Show. The focus today is on the Australian angel investment ecosystem and how it has evolved over the years. Now, to give us some great insights, we have Jordan Green, the president and founder of Melbourne Angels Inc. Now, Jordan is an internationally sought after thought leader in early stage investing. He is an experienced engineer, entrepreneur, executive, venture capitalist, and angel investor. He has over 30 years of experience in growing and advising technology-related companies in Australia, the US, Asia, and Europe. Now, he is passionate about angel investing and has been involved in coaching angel investors for over a decade. Now, he's a Silicon Valley software veteran. He is a founding partner of one of the best performing venture capital fund managers in Australia, founder and chairman emeritus of the Australian Association of Angel Investors. And Jordan is currently co-founder and chairman of the Asian Business Angels Forum, the Australian delegate to the Global Business Angels Network, and High Commissioner for Australia to the World Business Angels Forum, among other things. Now, with all that keeping him busy, Jordan, I'd like to welcome you to the show.
Thank you very much, Brian. It's a pleasure to be here.
Now, Jordan, let's start by walking us through your entrepreneurial journey and how you transitioned from being a tech entrepreneur in the Silicon Valley to an investor in Australia at a time, especially when angel investing was relatively unknown in Australia.
Thank you, Brian. I'm an electronics engineer. That's how I started, and that's still a big part of who I am. And that led me through a number of very interesting ventures. All up, I've actually started about 20 different organizations and ventures in my time. But certainly as a founder of a business, it culminated with my startup in Silicon Valley, where I co-founded a software company in the 1990s. It was a very exciting time to be there, the beating, throbbing heart of technology on the face of the planet. And a very instructive time, because when I left Australia to go and do that, there was no venture capital in Australia. There was no organized way of investing in startups. And of course, in most of the world, the startups were an unknown thing. It was an esoteric thing out there that only a few people were aware of. When I came back later in the decade, there was some embryonic venture capital in Australia. The first generation of VC fund managers had been started. But I came back with the experience of having both engaged directly at a social and personal level with a lot of the leaders in the venture capital community, but also from a company where we had been a strong, bootstrapped and profitable business who subsequently then did seek venture capital investment. So when I came back to Australia, I really wanted to see more venture capital happening in Australia, because I thought we have great initiative, great innovation. What we need is ways to help people make a real success out of that. So I did co-found a venture capital fund at the beginning of this century here in Melbourne. And after 5 years, we were able to exit that fund, invest and exit the entire portfolio, and deliver an 8 times return to our investors, which was generally considered at the time to be a pretty good return. Subsequent to that, for a variety of reasons, I was also looking at other ways to address the startup needs, to get more of those people who understand how to help a company succeed, and the founders who have all that passion and drive and vision to do something that's really going to make the world a better place. And how do you bring those together, making sure that in that mix, the people who are going to help do have some discretionary investment capital they're willing to put at risk with the founders? And lo and behold, that's called angel investing. So while I did actually start my own angel investing while I was in Silicon Valley, I didn't know it was called that at that time. It was just sort of the thing that you did, right?
Yeah.
And so for many of us many of the people I've met since then who are in the angel investment community, who are leaders in their local ecosystems, like myself, they started at a time when it didn't have a label. So when I finished up with the venture capital fund here in Australia, I was already seeing this need to grow a much bigger community, a more powerful ecosystem to help more founders, and also to offer a very different path to growth than was dictated by the pure institutional model of venture capital. And so that was why I went out and I searched around the country And I managed to find 4 other people who really, really wanted to see the same vision that I had of creating an angel investor community, in particular, an organized angel investor community that is using angel groups. So let me acknowledge the vast majority of private investors will always exist in an independent mode.
Mhm.
Angel investors are a very particular subset of private investors. And even so, most angel investors will still exist outside organized structures. But it's the organized angel groups that can actually build an ecosystem, that can be the anchor for awareness, for training, for developing an understanding and a community, and for interacting with the other players like the governments and the agencies and the VCs and everybody else who plays in an ecosystem. So we set out to build that ecosystem by starting a National Association of Angel Investors, the Australian Association of Angel Investors, and with as a seminal influence from which we wanted to encourage the growth of the angel community. So we each started our own angel group, 4 different locations around Australia. That was when I started Melbourne Angels. From that, over the next 5 years, we grew to having 19 angel groups around Australia. Again, each angel group was independent, but we all existed within a community.
Yeah, and that's the network effects, isn't it? Because essentially you could work in silos, but with network effects, there are advantages of education, experience curve, exponential experience curve effects, and also then networking in terms of also co-investing in deals.
Absolutely. So of course, each angel group is a model of individuals co-investing with each other. Most angel groups, that's a ongoing independent decision. That is, each individual angel makes their own decision on each individual deal about whether or not to invest and how much to invest, although they will all be investing on the same terms, of course. But then each angel group can co-invest with other angel groups and with other types of investors. But investors, like everything else we do in life, human beings like to work with people who are doing something similar to themselves.
And also people that they
results.
like.
That's right. So, so yes, I mean, at Melbourne Angels, about 80% of all our investments either are syndicated. So they're shared with other angel groups in Australia and overseas.
Okay. Now, that was the catalyst then to a more formalized setting. Then after that, once you got that ready, what was interesting is you started to engage outside of Australia. So basically, particularly with countries like ASEAN, could you walk us through some of the partnerships and initiatives that you've been involved in the past decade or so?
Sure. So let me start by making the point that, in fact, I didn't wait to start engaging internationally. In Australia, growing up and starting various businesses, what was clear to me is that in Australia, almost every small business is either an importer or an exporter. That is, Australia is a small market. Back then, it was 20 million people. Now, today, we're 27 million people. We are still a relatively small market. So an enormous amount of what we do is interact with the rest of the world. So every type of business that I've been engaged in has always had a very global focus. In fact, all the research I've done has shown that the term born global was in fact coined in Australia. But I can't find the exact origin, but all the research does seem to show that. And I was started on that path when a Canadian friend told me that's what he'd discovered. So my view as a business person, as a venture capital investor, and as an angel investor was always that the companies we're investing in that are going to grow to scale will need to grow to scale in big markets. And those are going to be overseas. And so if we're going to be seed investors and growth investors who can help our companies, we must have those networks to help those companies access those bigger markets. So I actually started building the international connections at the same time I did everything else. So at exactly the same time that I initiated the Angel Association in Australia, we brought in our friends from New Zealand, and we brought in some friends from Europe and from North America. And we started on day one with that international collaboration. What grew from that is that in the 2009, a group of us got together internationally and set up the first global association of angel investors, the World Business Angel Association.
Mhm.
And the inaugural conference for that, not the first meeting, but the inaugural conference was held in Beijing. So it was Asia-centered, as is the reality of our Asian century, with
Mhm.
all the growth economies, the big growth economies being in Asia at the moment. And then subsequent to that, born out of Singapore, we established the Asian Business Angel Forum, a Pan-Asian angel conference that moves around from community to community in Asia each year. And the goal of that event is to help each of the Asian communities promote and celebrate their startup communities, their innovation communities, and their angel investors, and also to connect them all. One of the things that Asia has more strongly in my nearly 40 years of doing international business all over the world, Asia has a really strong cross-border business narrative. It's very, very common for people in Singapore and Sri Lanka and Hong Kong and Jakarta and everywhere to be dealing with each other in business and to be constructing businesses that have a foot in multiple countries. And so from an angel investor point of view, it was a very important thing to keep building on that cross-regional business community.
Now, give us a perspective. Now, I want to zoom in on the Australian landscape today. Could you give us a perspective of the tech landscape in Australia today? Because people don't realize that at the very top end of the market, Australia has 28 unicorns. And most people only know the likes of maybe Afterpay and Canva. Can you paint the picture of what the ecosystem looks like today?
Sure. So of course we have to acknowledge that everyone has a slightly different definition of unicorn.
Okay.
The number that I've provided of 28 unicorns perhaps won't be equally defined by other people. But the fact remains we have a very large number of companies who have achieved significance with technological advances in life sciences, in financial services, in manufacturing, in telecommunications, in semiconductor electronics. So there's a bunch of very diversified businesses that have achieved this wonderful success story, mostly very quietly. But there are platforms for why that's happened. Australia was the third country in the world to invent a digital computer. First was the UK, then was the United States, and then was Australia. And that all happened within a few months of each other 70 years ago.
Okay.
Along the way, Australia invented Wi-Fi, right? None of us would be talking the way we talk today if Australia hadn't invented Wi-Fi and shared it with the world. So Australia has had a whole history of landmark innovations in technology, penicillin in the health sector, for example. So what's happened is some of our companies are born from those very significant technology innovations, but also it's that born global nature that we recognize if we're going to build big businesses, for the most part, they have to focus on a global market. So more interesting, I think, than Afterpay is Airwallex. Airwallex is a financial services startup that's born here in Melbourne. Now I think may officially be headquartered in Hong Kong, but they focused on the need for everybody in Asia to be able to move money across borders much more easily. With so many people in Asia being mobile and moving into different communities to generate revenue and then wanting to send it home to their families, there had to be a better way than the old American model of going to the Wells Fargo office or whatever it might be and paying expensive fees to move a small amount of money through an archaic system. So the Airwallex team imagined a better way, and they are one of our unicorns by anybody's definition. In just a few years, they've become I think the second largest provider of money transfer services across Asia.
Now that's a hot space globally, especially there are a lot of startups in Southeast Asia, Indonesia, Malaysia, Singapore, there are quite a number of them. But I want to zoom in, Jordan, now on the typical Australian angel investors. What are the typical profiles like?
I'm not sure if typical is a good word, but so angel investors, like I said before, angel investors certainly come in two basic flavors, okay. Those who join groups and those who don't.
Okay.
Obviously, those who join groups, or maybe not obviously, but most groups are what we call in Australia, or what we call member-led groups. That is where the actual group itself, the entity of the group, is a small non-profit entity. It's not a business. It doesn't have a large staff. It doesn't have substantial revenue streams. The revenue is typically the membership fees paid by the members, and those are usually pretty modest. So a member-led group is one where the angel investors themselves actually do the work. They're out there in the community, making sure that people are aware we exist, finding good opportunities, bringing them in, coaching them, evaluating them, negotiating them, doing the deep due diligence, and then, of course, making the investment, after which the real hard work starts, right? All of that other stuff takes a lot of time, but the hard thing is helping companies succeed and reaching the point where they can generate a return, they can generate an exit. So to do that, you have to have people who like to work in collaborative, collegiate, collective ways. So most of the people who come into angel groups are not people with great big egos, but they are people who have done whatever it is they've done in their lives to establish themselves to be in a position to undertake this sort of risk, to undertake this sort of involvement, which means they tend to be very confident individuals and what I would describe as financially secure. You rarely find ultra wealthy people doing angel investing because they have too much to work with. The same reason why big funds don't do startup investing. Right? It just doesn't work in the economics of running that big pool of money. It's not to say it doesn't happen, it's just very uncommon. So I think most of the people you'll find in the organized angel investing community in Australia are men and women in their, if the age is moving down. It used to be, we would have said it was somebody in their sort of mid-50s. Now it's more likely to be someone in their mid-40s. We're getting a lot of founders of startups today who are current founders wanting to get in on angel investing while they're still trying to build their first successful business. The challenge for them is they don't have very much money. So a lot of them are looking to crowdfunding platforms. So that's an interesting dynamic that we'll have to wait another 10 years to see how it really plays out.
So Jordan, here's the interesting dynamic then. It seems to be that, and even though the angel investing scene grew in the likes of Singapore and Malaysia, Indonesia, grew much later than Australia, you find that the average profiles are younger. You also have, because of the growth of equity crowdfunding platforms, much younger people starting to come in at smaller ticket sizes. So like the Silicon Valley model, where they basically, they probably have 10,000 to invest, but basically they're investing it in 10 different startups or something like that. It's smaller ticket sizes. What are the ticket sizes typically for, say, Melbourne angels, for example, and what sort of companies do you normally invest in?
Yeah, so at Melbourne Angels, the last year within our group, I can tell you I did the stats, and last year the average investment per member per deal was $37,000.
Okay.
Now that's the average. So obviously there were some that were much bigger and some that were lower. We don't allow anything less than $10,000 because we feel that that's not going to make a big enough difference to the company. And frankly, it's not going to make a big enough difference to the investor. Okay. Even if you get a 10 times return, if you put in $1,000 and get $10,000 back, it's very nice to have. We'll all take it. Yeah. But is it really what angel investing is about? We're not excluding. In fact, we're working very hard at Melbourne Angels to create a model to include those younger investors with smaller amounts to invest. There are some regulatory barriers in Australia as to how we might do that. So while the average age is coming down and the profile is more diversified, it used to be people who had built businesses themselves and had a degree of success, either still running a cash cow business or had an exit and generated the investment capital that way. Mm-hmm. Today, it's not just younger people, but we're getting people from all walks of life. It's not just people who've been successful business founders. And that's important across the whole world, because if you take the Silicon Valley stereotype, it's all about a successful tech founder becoming an investor. And frankly, even in Silicon Valley, that's not what angel groups look like. They have a stronger percentage of those people, but
Mhm.
they don't all make up those people. So we are seeing across the world a trend down in ticket sizes on individuals. In the United States last year, the average ticket size, depending on which set of research you look at, was somewhere in the order of $10,000 or $11,000, so per angel per deal,
Yeah.
even while deal sizes were going up. So what that tells you is there's a significant growth in intergroup syndication. Because if deal sizes are going up and individual investments are coming down, the only way you can meet the hurdle of raising enough money is to get more people involved. So that is what's happening everywhere. Of course, in Asia, there's a different dynamic. There's a different demographic. Most Asian countries, not all, but most Asian countries have a larger, younger proportion than most of the Western countries, where we have much older demographics. So that's one reason why we're getting a younger community in Asia investing in angel investing. And of course, the other thing is that it's an awareness. It's a whole shift, a generational shift in the technologies that are available. So Malaysia had the multimedia corridor. That was a great initiative and built a fantastic manufacturing base in Malaysia, but it didn't actually move into the more sophisticated software and hardware innovation, because it was more about manufacturing and less about originating new technology. Now that's normal in every country, but that's what's changed. The younger generation in Malaysia and in Singapore and other countries are now in that innovation origination phase. So that again explains why there's a much younger focus on what's going on. Whereas that innovation origination phase has been very prominent in, for instance, in Australia, as I mentioned earlier.
Mhm.
And what we've lacked is adequate domestic market to fully capitalize on that innovation.
I think, Jordan, what's happened also is this, in terms of the Malaysian tech ecosystem, the government has played a role in terms of seeding the ecosystem with venture capital money and also with grants with organizations like Cradle. And what you find is also younger and because of the liberalization of investment opportunities with equity crowdfunding, if you look at the regional tech ecosystem, Malaysia is probably one of the most successful countries in terms of equity crowdfunding. So what that's allowed it to happen is basically democratize angel investing, because there are a lot of companies that you could invest in at even as little as 1,000 or 2,000 ringgit in terms of your ticket size. So it's just brought in a lot of new people and younger people into the market who are not even in the tech industry, who are perhaps working in a job in a government-linked company and say, look, I want to try this. This is exciting. Obviously, the sexiness of it also helps. But that's the big change that has happened in the last couple of years. I think the regulatory framework has enabled the democratization of investing in startup companies.
I think that's absolutely true. I mean, so Asia started, post Second World War. The leaders of the Asian economies, the ones who are the big manufacturing bases now, Taiwan, Japan, South Korea, they were all hugely enabled by really good government initiatives that really enabled these high technology capabilities to be evolved and to become globally dominant. Singapore, in being a very small country, but focusing on high value services and high value innovation, did a really good job. Then, as you say, we start to see the moderation of regulation and the enablement. So Malaysia created a number of government-backed venture capital funds and created Cradle, one of the most successful agencies of its type anywhere in the world that I know of. But so India has opened up its profile. Sri Lanka has once it got out of its civil war era, which was most unfortunate, has moved ahead really strongly with a great education base and good investment profiles. All of these things, I absolutely agree with you. But one of the other aspects that I'd point out is that angel investing is all about a much more direct and equitable way of creating and distributing wealth. One of the reasons a lot of young people everywhere in the world like to get in on startups and get in on it in the angel investor mode is because you're not waiting to go through your father's model of trying to become an expert in the stock market just to try and generate that return. You're actually in there with a company that may never get onto any stock market because it's going to grow rapidly, build real value, change people's lives, and then it's going to get bought by somebody.
Yeah.
Now, of course, the big ones, the unicorns, the decacorns, they're generally going to keep going, but they're very rare. It's great to be in one of those, of course it is, but they're very rare and you can't really predict them. But you can do really well with much more modest outcomes.
Now, I wanted you to put on the lens of Jordan Green, the entrepreneur investor with a track record as an angel investor spanning 3 decades. Now, today, what are you looking for specifically in a deal with regards to the companies and entrepreneurs?
So it's interesting. I was asked this question recently and it made me stop and think, what did get me into all of this? And a big part of it was that when I was living in Silicon Valley and I got to know a number of the top tier VCs personally, these are men and women of rare capability. I'm not just talking about firms. I'm talking about the individuals who, despite getting paid quite well, are very passionate and very devoted. And the spirit, the catch cry that they had, which touched me and has stayed with me, is we want to change the world to be a better place. And so that's what I look for. So when people come to me with things that seem super superficial, they may or may not make some money, but it's a better way to order coffee, it just doesn't excite me, okay? And that doesn't mean they're bad businesses. It just doesn't excite me. First of all, I don't drink coffee, but more importantly, I don't really care about a better way to order coffee, okay? Lots of people will care about that and benefit from it. I'm more interested in people who are going to significantly change the experience for a large group of human beings in a way that makes a positive and constructive change to the world in which we live. It doesn't have to be idealistic. It doesn't just have to be clean energy or better social outcomes. It can be something as simple as a more efficient construction industry that spends less time arguing between contractor and subcontractor about payment of a bill.
Yeah.
All right. So it doesn't have to be purely idealistic or altruistic, but it does have to make that significant impact on the world working in a better way and more people having a better life as a result of success.
Now, John, one of the things with investing is you win some and you lose some, and you often learn more from the ones you've made mistakes. Could you share some of your past mistakes as an investor and the lessons that you've learned from them?
Well, very much following on from what I was just saying, one of the most dangerous things is to fall in love too early with what you think should be there. So one of the biggest things I have to teach angel investors when they first start, particularly when they're coming from already being successful as business people or as executives or in professional services, is that when we look at an opportunity, we tend to project ourselves. We tend to say, oh, I can see why that would work. And if I was there, this is what I would do. And it could be hugely successful. The problem with that is we're not doing that. We're going to provide some capital and some advice and some moral support and guidance to the entrepreneurial team. They have to be the ones who are going to execute. So we have to be very, very careful not to just fall in love with our own vision of what it could all be and maintain a degree of objectivity. And that's one of the great things being an angel group does, of course, right? I can't say joining an angel group can't guarantee that you're going to make a great investment, but it should come very close to guaranteeing you won't make a terrible one, because the other people in the group can keep you honest. Was that a good enough answer to that question on due diligence? Are you really sure that's going to work out that way? So not falling in love, not investing in anybody who lies. If people lie to you, you can be polite about it. You can be courteous about it. You can understand, particularly with a lot of young people, they don't really mean to lie. They think they shouldn't tell you something because I don't know, they think it's going to be bad for in some way. But startups are all about full transparency. From an investor point of view, I want to hear it all, good, bad, pretty, ugly, because if I don't know it all, I can't help you. I'll give you the wrong advice and I'll make the wrong investment decision. So founders who can't be fully transparent and honest, that's a great way to lose money. Another mistake, I guess, is believing the fad, okay? Don't follow trends. I mean, one of the things I always say is the problem with a trend is you only know a trend when you're standing in the future looking backwards. That's the only way you can recognize a trend, right? On the evidence of things happening. But as a startup investor, we're standing here trying to see the opportunity for success in the future. Yes. We have to anticipate those trends. We don't want to be investing on the crest of the wave just as it's about to fall over. We want to be investing at the beginning of the swell, because every company takes at least 2 or 3 years to be ready to meet its market. And so in that time, the wave starts to rise, so that when the company is ready to go and the market is cresting, that's when you get the big opportunities and the big outcomes.
And that's a very good point, because there's a lot of FOMO investing going on, not only in our part of the world, but also in the Silicon Valley. It's about trying to not miss out, but the reality is they get caught in the frenzy and obviously valuations and all. And this also impacts experienced investors.
Well, I would, if you'll forgive me saying so, I think any investor who invests on the basis of FOMO, on the fear of missing out, is a fool. Okay? Fear is no basis for making an investment. Not a startup investment. Maybe it's different if you want to discuss, stock market things or property. But if you're talking about high risk, high reward, deeply innovative startup investments targeting rapid value growth, investing in a company because you're afraid of being compared to somebody else, I think that is just foolish.
Now, final question, Jordan. Before we end this fascinating conversation, any final thoughts you'd like to leave us with before we go?
Look, I got into all of this as a founder and as an investor because I genuinely believe that if we keep striving to make the world a better place, it will be a better place. The imperatives have changed over the years. Today, it's all about climate change. That's really only a consequence of it all being about pollution when I was a child. Pollution is what caused climate change. So the labels have changed. But I really think that if you can stay focused on doing this for a reason that is going to be good for everybody, and yet still has the potential to make you and the founder a good financial return, because the good financial return is what enables the constant improvement, the investment in the next opportunity, and doing it in a way that shares that wealth in a much more equitable manner than the old school model of the rich getting richer. Most angel investors are not rich, financially secure perhaps, but they are not the very wealthiest people in the community. And so that's one of the things I like. Angel people, particularly in angel groups, tend to be people of good character. They say what they mean what they say, and they do what they say. So you can work with them in a collegiate and collaborative environment and enjoy it. And that's the last thing I would point out, that doing startups takes a lot of time and effort. And if you're going to do that and not find it all too tedious, especially because the rewards are often quite a long time in the future, the financial rewards, you have to find a way to do it that can be fun for you. And that's one of the best reasons about going into a group. Other like-minded people doing the same good work together is a good way to spend a lot of your time.
Now, Jordan, thank you very much for taking your time to be on the show. It was fascinating.
Well, thank you very much for having me. Hopefully I look forward to coming back one day.
Yes, we will, on a different show perhaps. I'm Brian Fernandez, and I've been speaking to Jordan Green, founder and president of the Melbourne Angels, Inc., on Biztech's Investors Conversation Show. This video will be on our Facebook and LinkedIn sites, as well as our website, www.biztech.asia. Please subscribe and like our various platforms. Thanks a lot for tuning in.